you're in a scenario where if I'm correct that the economy is going to go into recession, now tell me how Bitcoin doesn't go lower if the S&P drops 25 to 30%. By the end of this recession, it is going to be nasty. I think that we're in a recessionary period for at minimum 2 to 3 years. In the near term, though, it's important to recognize that I still see further downside. I'm at a 12 to 13,000 high-end target with a low-end target of.
Hey guys, welcome back to Let's Talk Crypto. It's no secret that the macroeconomic outlook for the foreseeable future is not positive. Therefore, 2023 as well as the next few years could be particularly turbulent. In his recent interviews with the David Lynn Report and Liberty and Finance, Gareth Soloway, chief market strategist of InTheMoneyStocks.com, shared his outlook for the economy and crypto markets in 2023, so we'll be watching clips from both interviews today. Gareth sees significant downside in the stock market due to a recession that will last for years, and he believes that elevated interest rates will remain for a while. In both interviews, he discussed why he is long-term bullish on Bitcoin, and how the recent FTX scandal actually makes him more bullish on the regulation front. In the near term, however, Gareth believes that the correction in risk assets like stocks and Bitcoin is not yet over. He also explains why this bear market might be different from before and last for a longer period of time. Let's listen to Gareth as he shares his views on how the current macro conditions will affect markets in 2023, as well as some useful tips for investors looking to accumulate wealth and potentially become millionaires. So make sure to stay tuned and pay close attention until the end. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
So a lot of that has to do with the fact is that we've been kind of addicted to Federal Reserve quantitative easing for a long period of time, right? So the market has not really experienced a recession in basically almost, 15 years. And what that does is it makes the market not know how to deal with a slowdown without Federal Reserve printing. And so my fear is that as we see the economy slow down due to higher interest rates, and we now have the Fed funds rate around 5%, you're going to start to see a recession kicking in probably in the second half of this year. And the kicker is going to be that inflation is unlikely to get back below 2%. It might get close. It may be 3%, 2.5%. But if the Fed won't come out and print right away, how does the market, how does the economy find its way out of a recession? It doesn't know how to anymore. In fact, you could argue that the Fed has broken the underlying ability for the economy to get out of a recession. So I think that's where I'm looking at it from that kind of vantage point. And I do think that that's the likely scenario here. We're facing, it's not going to be like a depression. I don't foresee that in the next couple of years. It's more like going to be a tough economy that's going to last for years. My guess is the economy will start to get worse and worse, which will then force the hand of the Fed. So even if we're at, let's say, 2.5% inflation, if you all of a sudden see 10% unemployment, the Fed will feel forced to act at that point, and then you'll get some sort of stimulus going again. The only problem is it starts the merry-go-round again, where you have then higher inflation coming in over the next few years. So, I mean, this is one of those things where it's like a drug addict. When you get addicted to it, it's very hard to get off the juice, if you will, and that's what the economy's facing now. By the end of this recession, it is going to be nasty. And I said this before with you as well. I'm looking at no new highs on the S&P 500 for 10 to 15 years. I think that we're in a recessionary period for at minimum 2 to 3 years, and it could even be dragged out longer. Eventually, unemployment goes so high that even if inflation is 3%, the Fed will come to the rescue eventually and stimulate. And again, I'm talking unemployment could be north of 8 to 10%, and then they're going to be forced to stimulate to kind of bring that down. So again, I think the issue too in this scenario is that you're going to see them starting to print or lower interest rates, and then it's going to create a bigger inflation concern, right? So if you don't get inflation back into the box and close that box tight, you're going to have the stimulus creating this fear or reality of higher inflation for longer periods of time. And this is going to be a battle that the Fed is going to wage for years to come against inflation. If you think about it, look at how long we've been in a market with underinflation, with sub 2%. Well, you know what? When you're sub for a period of time, it's likely that you'll be over to even it out for a period of time. And that's going to make it so when you have inflation high, it's going to be very hard for the consumer to really continue to spend at the levels they are able to or they want to before, obviously, the markets get back to all-time highs. So definitely this Friday, the jobs report, that's going to be the big economic data point. And then I think it's on March 22nd or so, we have the Federal Reserve next meeting on interest rates. I'm expecting a 25 basis point hike, not a 50 basis point hike, but I think they'll continue with their 25s. And then really the market will be gauging what Jerome Powell says and his guidance going forward.
Now, let's look at the Bitcoin chart, as Gareth shares his downside targets that must be hit before getting back in.
Yeah, so long term, I'm still very bullish. And again, important to recognize that I'm bullish on Ethereum and Bitcoin. I'm undecided on ones like Solana and Cardano. I do think they'll probably survive, but it's hard to gauge exactly how they do in the longer term. But I do think, for instance, Bitcoin longer term, very, very bullish still. Now, in the near term, though, it's important to recognize that I still see further downside. I'm at a 12 to 13,000 high-end target with a low-end target of 9,000. But I'd just like to show you here, this is the chart of Bitcoin. And what we can see very clearly here is that we've had a big rally. A lot of people, like if you go on Twitter, they'll say, oh, it's the bottom. We're going to start a new bull market. I disagree. If you look at this M pattern, look at the M pattern. The second portion of the M is higher than the first. Now let's go back to the all-time highs on Bitcoin and look at that pattern. This is a classic topping pattern. So for me, what we've seen recently is actually a bear market rally. We've now come off of that 25,000 retrace with a bear flag. We then dropped, and we're now bear flagging with a likely downside move to at least 18,000 and change. And ultimately, I do think that we're going to see 12 to 13 and eventually 9. And think about this, right? You're in a scenario where if I'm correct that the economy is going to go into recession, then you're looking at the stock market probably with another 25 to 30% down from here on the S&P 500. Now tell me how Bitcoin doesn't go lower if the S&P drops 25 to 30%. We know it's a risk asset, at least right now. That's the likely outcome to the downside, in my opinion. In a weird way, I actually view it as a positive. I know that sounds super weird that FTX's collapse could be a longer term positive for Bitcoin, but I think it spurred the onset of regulation that's coming a lot faster. I think if FTX didn't happen, if Celsius didn't happen, if you had nothing going on shady in crypto, then there'd be less push to regulate it because investors in crypto wouldn't be up in arms that they're losing money left and right. And I think ultimately for the health of cryptocurrency and the sector, you have to have transparency and regulation and all these things. So in a weird way, it's almost like a longer term positive, even though it causes short term pain.
We've been in a bear market for a year and a half now, and if we look at past cycles, some analysts suggest that we have another 12 to 18 months of stagnation before Bitcoin rises again. Let's hear what Gareth has to say about it.
They're saying that generally the Bitcoin bear market, 2 years, give or take a little bit, like you're saying. And the issue here that I have with that is that, number one, we don't have a lot of historical bear markets in Bitcoin, 2 to 3 bear markets since Bitcoin's inception. The other issue is that if you look at when we came out of that bear market in 2019 to 2020, it coincided with the COVID collapse, which then triggered the Federal Reserve to print more money than we have ever seen printed in history. And so the question is we're now in this new environment where I think it doesn't mean that the cycle won't play out exactly like it has. It just means we have to, as investors, take that into account, that there is no printing of money going on from the Fed and interest rates are a lot higher. So there is a precedent now that if you map that out, the Bitcoin bear market could even last a little bit longer, much like the stock market bear market.
It is important to remember that Gareth Soloway is a trader, so his views of the market tend to differ from those who are simply looking to invest with a long-term perspective. However, even if you're just a hodler and not a trader, the constant market movements create amazing opportunities for investors looking to add to their position. At such times, the experienced insight of a professional trader like Soloway may come in handy. With that being said, let's get back to the interview where Gareth shares some trading and investment tips that could be the difference between making just a few $1,000s or becoming a millionaire.
I have a couple positions short in crypto right now, and I do have a little Bitcoin on the long side as well. So I'm a little hedged. I'm kind of short alts right now versus being slightly long Bitcoin. But the key is this, it's a very, very small position. And what I want people to understand is that you can still accumulate in this lower range. I'm still a huge long-time bull or long-term bull on Bitcoin. I still think it's going much, much higher than even 69,000. It's just you have to give it enough time to kind of digest what the Fed is doing and kind of cycle out all the weak hands. So again, for me, it's just going to be continuing to accumulate. We get to 15, we get to 13, we get to 10, to 5. I will continue to kind of accumulate with a long-term view. but I'm not going to be someone that's chasing it at 25,000 on a pop here. I want to be patient. I want to be disciplined. And that's really what traders are going to be, right? If you're a successful trader, you are uber disciplined. Patience is the hardest thing to be. And the beauty of it is this, right? Is that I've been wrong on trades before. I've been wrong on many, but the key is that what I always understand as a technical trader is that if I miss one today and I'm wrong on it, there's always another one tomorrow. And that's the beauty of trading gold and silver and Bitcoin and ETH and stocks. And I mean, there's just so many things to trade that who cares if I miss one? Heck, I miss them every day. All you got to do is capture one or two here and there and you become a millionaire.
What do you think about Gareth's view for the markets in 2023? Can we expect to see more downside on Bitcoin before we bottom out, or are you ready to call it the beginning of the next bull market? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.